Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the Forex market. So you could see that in general markets across the board are going against the United States dollar. Dollar is becoming weaker gradually, but not too fast. It's just because everybody understands that crisis still stands in place, and actually it's too early to celebrate the victory. So at the same time, investors are a bit frustrating and actually stands in uncertainty. They don't know what to do currently, just because central banks providing lots of liquidity. Actually, the demand on the United States dollars in the swap lines that have been opened, as you know, between the Fed Reserve and all the major central banks, demand stands not too strong, so it exists, but not too significant trading volume stands on the swap lines. And but at the same time, it provides lots of liquidity right now on the markets. This liquidity appears in the banks, in funds, and of course it leads to just rising of the corresponding assets. So you could see what's going on the stock market recently. You could see what has happened previously a few days ago on the Bitcoin market. Dollar is becoming weaker in these backgrounds because it's becoming more dollars right now providing to the market. But we should understand one clear thing, that this is just technical action. Just people get lots of dollars and they just put them on the market, that's all. But this doesn't mean the changing of the fundamental background. And the fundamentals then so that we still have the crisis. And nobody knows what will be in the result. So currently, the amounts of the potential problems, if you take a look at the deposit that is not insured by the FDIC, United States, it counts around $8 trillion, and only 2% is a potential object to be insured and guaranteed by the FDIC. So maybe not all this stuff will collapse, but it seems that emission money printing could count 2, 3, maybe 4 trillions to totally resolve the problem. So, and as you understand, what could happen with the inflation in this situation? Besides, Fed right now has different problem, is that it provides the assets to the banks at the 4 or 5% rates, or 4.05 rate. But currently yields are dropping, and well, the banks need some interest margin. So they do not want to provide loans to the real sector of the economy because it's too long, it is expensive, it is risky, but they need some trading tools, some assets where they could invest this money. And they need just greater interest rate on the long-term yields, on the long-term curve. That's the problem. That's actually explains why some analysis suggests that Fed could raise rates significantly higher. So they simultaneously will be printing money and raising the rate. So this is one of the potential scenario, and well, it is not absolutely stupid, so it makes sense with this. Meantime, on the technical side, as you could see, based on the liquidity providing, euro currency is creeping higher, and today it stands at the upper border of the triangle, as we said, and today we will be watching how market will flirt with this C point. If it will take it out and ABCD pattern will be erased, in this case probably we should be ready for the upward continuation, at least back to the top. Here we have the barrier of the overbought level, it's around 109, so probably will be the next destination point. But potentially market could return it back up, and recall what we talked about, possible double repo pattern on the weekly chart. It means that we could get either real double repo or double repo failure. So currently we're not talking about the bread and butter because the market still wasn't able to complete downside action, complete the OP. Another reason why that's important is just because this is also, as you could see, fib level. It's 108.35. Confidence area has been broken, as you could see. So, and we will be watching what will happen around 104, 108.05, 108.35 area. So this is next destination point. On the hourly chart, market has exceeded our XOP target that we discussed yesterday based on this ABC bottom. Theoretically, we could try to use wider ABCD with this ABC point spots. In the current circumstances, I prefer to use more extension of the collapse. So here we have the significant drop based on the crisis, as you could see, performance. I just use 127 extension to the upside, which give us 108.26 area, which is perfectly agrees with an area between these lines. It's point in the top and 618 level. And depending on what will happen around it should explain everything. So whether it will be upward continuation or market still will turn down and start downward action. It's difficult to say how long the effect of the liquidity pump will last. So currently its amount not really big, but potentially it could rise, and let's see what will happen, because a few more banks in the United States now have the really big problems. So easily it might be additionally 200-300 billions could be pumped with just 1-2 sessions. So currently it is really fast. So that's what we have currently in euro currency. I do not see lots of things to do. We do not have any bearish background right now for taking the short position. Besides, we're coming to the Fed statement. From the bullish point of view, market still stands in the widening triangle, and it still exists some uncertainty concerning the upward breakout. That's why personally I prefer to sit in the hands and wait for some clarity. So that's our view on the current situation in euro.